ones that I can mention was Zoran. It was a very unpopular. It was an Israeli company listed in New York. Management been there, I think, 20 years, and it had genuinely disappointing its shareholders continually. And they had a little business that involving digital printing technology. They had great patents in the area. We could see that they were off the scale in terms of their position, in terms of the strength of their intellectual property. And then you dug through and see how that affected the market. This subsidiary was probably 70-80% of the market for these things worldwide, and the competitors were two Taiwanese private companies, and you saw the margins were huge. And this unit had generated 500 million cash flow in the last 3-4 years. Now the management had chosen to take those cash flows, and this company was a sort of $400-500 million company from memory, and go and compete with Samsung in set-top box technology from memory, or something like that. But competing with Samsung as a big company is difficult enough. If you know Samsung's way they operate, which is to dump capital in markets of a certain size. And it was quite a strong bet for the management to do that. And they had used all these free cash flows and continually had got nowhere with this. And eventually the shareholders sort of gave up on their share price. Literally went down to the cash on. They had 250 million on their balance sheet. And the share price went literally just above cash and the value of the buildings they owned. So literally it was a net. Now you don't see nets that often. And we knew that in there was this gem. And so very fortunately for us, we were busy. They had one announcement where they yet again missed their earnings, and they must have missed their earnings for a long time. And the share price collapsed to literally just above the cash value. I think I've never come across a company that was so unpopular with its shareholders. There was just revulsion, and they didn't think they could get the management out. And so that was an interesting issue, because it wasn't a beautiful company. It wasn't. You had to dig around. You had to know that they had this thing in there, and it was difficult to find out. And then an activist investor came in and really made the case, and they published a very good case which they put out, and they did they wrote up a breakup value of the company and subsidiaries, what each one was worth, how much so they did the analysis we probably short-circuited and did it from the margins, which was helpful to us to validate our case. And the share price moved immediately on that, and then they organised a proxy fight to replace the whole board and produced another board. There was a compromise, and then the management's response was to sell themselves to a British company that had no technology but also lots of cash, called CSR, which we happen to know. A compromise was reached, and the value was reached, and then that company then did exactly what the activists have been asking, is they basically bought back shares with cash, effectively released value, stopped competing with the Koreans, and started running their business in the way the activists had asked. So that's a case of really unpopular company that normally as an investor you just wouldn't be comfortable getting into, because you're not sure you can get the management out, and you're not sure they're going to drive it into the ground. I think we were confident because we knew they had a very, very valuable asset in there, that even if this thing went, we couldn't see it going bankrupt, didn't have any debt, had lots of cash, that something would happen. We didn't expect it to happen so soon. We were very fortunate. But that's a case of a very unsexy company with a sort of hidden gem in there.
But in this case, I guess the patent asset was recognized by the activist investor, presumably.
They'd recognized it, yeah, and they would have probably, they'd done a very formal analysis of the company, and they looked at every subsidiary, and they looked at every competitor of every subsidiary, and they'd noticed this one subsidiary. They'd then imputed back the margins from the competitors of this subsidiary, so they own 80% of the market share in this field. We can see their margin of this, because the management hadn't broken this out, which subsidiaries were producing, which cash from memory. So they did a very thorough breakup analysis of the company, which revealed it all. I would guess they may well have gone and looked at the patents. They're pretty thorough people. but I think they'd done a break, they'd taken each subsidiary and worked out what it was doing in its market, how it dominated the market. We'd come from it from a position, there's something to see here, because these guys have an extraordinary position within this little niche, and we could see that from their patent position. And all their competitors, remember with patents, your competitors are really citing you. We're saying, this guy, they've got really excellent stuff here. And that really tells us where to look. And once we looked, we then saw there's something there.